it has been fructified, and I'm grateful to the regulators, market participants, the clients, and the TCS technology partner and other vendors who have helped us in scaling this height. Of course, my board and Scott and Woodon committee members, they all stood rock solid and supported the management and the management team in this process of data migration, or rather technology migration. And more important, and I count on it many a times, the well wishes of the shareholders and the other stakeholders of the MCX, who have been desiring that we should scale greater heights, and they wished me on so many occasions. In whichever way they could help, they helped. I'm grateful to all of them for their for supporting us, and also grateful to all the people who have reposed faith in us, that we may fail once, we may fail twice, but not all the time. And that's how it happened. Maybe we were not able to meet the expectations on 2 other occasions when we planned to go live, but this time we have been successful, and there's hardly any problem in the system that we are running. And we have completed one complete cycle of deliveries, expiries, margin competitions, whatnot. Whatever the complexity that is involved in running an exchange has been done, and successfully. Maybe a sporadic events maybe they're confined to a particular member, and that we have been addressing. And we have, as late as yesterday, we have even addressed the latency issue also, and now it is much faster. And I think we are expecting the volumes to be on track as much as we had prior to the launch of the platform. That is from in the first half of October. What are the volumes that we have clocked? We expect the volumes to come back. This is on the CDP, that is Commodity Derivatives Platform. Having said this, I am also seeing, this quarter, that is the quarter ending September and the quarter ending December, will have a major impact of the payments that are made to the previous technology vendor, which is already disclosed to the market participants, and its impact is pretty huge. This is one important reason for which reason the stock has, the financials have seen a hit. The second one, of course, it's good to have a problem in the sense that we have to contribute for about 11 crores odd we have contributed to SGF, and SGF contribution is needed because the open interest on the exchange has been increasing. That means people are sticking onto the platform and they are keeping the positions open, and they know that this is the platform where they have to hedge their risk, the commodities exposure that they have. So obviously that is the requirement. SGF is a requirement of these regulations, so we have to comply with it, and we will continue to comply with that. But it's not something, although it is shown as an expense, it's not something that we have lost this money in that sense. So it is just parked maybe in another bucket called SGF. I would not like to take much of your time. Probably as we go along, I will answer questions. Maybe more details will be furnished. I think I request you to open it for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, so thanks for the opportunity. And first of all, congratulations on the technology shift that has happened finally. And my first question is, so as we have achieved the transition, so how we are seeing the pipeline in terms of product launches? Because as we have said earlier that we have a lot of approvals that we have received in terms of launches. So if you can throw some light on the product launches, and also I have follow-up that I will ask later.
Okay. Product launches, yes. We have certain approvals, and we are going back to SEBI to get that renewed. Okay. When I say renewed, it is not that it's expired or anything of that kind, but just to revalidate that we are going ahead with this launch. So we are in the process of doing that, and once we do that, and thereafter we will launch all the contracts. The more important at this point is the steel TMT bar contract. That is something which we propose to launch at the earliest, and I will spell out, and of course we will inform the market participants well in advance when we launch other contracts.
And sir, we have the index options approval still, and we have received at the early part of the year. So for the index options, we will have to renew it again from SEBI. And also, what is the possibility of the weekly options? Because we were also thinking of reducing the tenure of contracts and also launching some shorter duration contracts. Because if you see what is happening on the other exchanges, so the whole volume is shifting to shorter duration contracts. So what is your view on it, and how the regulators is actually looking at it from the commodity angle? And also on the mutual fund PMS and FPI participation, we have seen some traction there, but still it's very small portion of the overall volumes. How do you see that improving? And after the launch of the new platform, can we see some traction there?
Yeah. So the first question is with regard to index options. Index options, regulatory enablement was done. We have never said that we have applied it or got it, because you need again there also 1,000 crores of there is a we have to of course make an application. Given the kind of volume that we have in this, we have not made an attempt as yet. And so regulatory enablement is what is done. That's the only thing that has happened. So we have not as yet applied. Coming back to the other contracts, as I said, we will be launching them as and when we need to see the ecosystem also, and accordingly we will be launch them. The smaller contracts, yes, it is required tenure. And we will smaller means in the terms of tenure of the contract should be not monthly or bi-monthly. It could be smaller, and I think that is something which we had one contract, gold options for monthly contracts on a bi-monthly contract. That is something which we have to work on that, and then we will launch that. And the still smaller ones, maybe fortnightly, weekly. I think that is yet to be taken up with the regulators for approval. So this is what it is.
Okay. And sir, in terms of the increasing competition, I know we have the dominant market share, but the regulators allowed the other exchanges to launch options, despite they were not fulfilling the criteria for the launch. So how do we see it? Is it a risk for us in the medium term? And also in terms of the SGF contribution, based on how SEBI has been approaching this and asked all the exchanges to increase the SGF on the equity side also. So based on that calculation, on 5% of the total exposure that is there has to be there in SGF. So based on that, the exposure that we have, the SGF comes to around 1100 crores or 1200 crores for us. So do we think that SGF will move in that direction?
Well, with regard to the first question, whether the competition is scary, and well, we would like to live in the comforts of monopoly, but then competition teaches us or strengthens our willpower as our ways of doing business, and that's how we are fortifying ourselves. So to that extent, yes, we are not worried as much as it is made out to be. But yes, we have to be on guard constantly and then see whether we are slipping anywhere on the business front, and then take necessary corrective steps if there are any slippages. On the requirement of SGF, I'm not too sure where this 5% requirement has been prescribed. There is a formula at this point in time, and currently the requirement we have been whatever keeping is about 560 or 70 crores of SGF required. That is a minimum required capital, and as such, you add in what you call penalties and others, the SGF cover is almost 744 crores we have. So let us see as we go along. We need to keep on strengthening it. Probably if members also contribute, this will further get strengthened. But that should be made mandatory across the exchanges. Then only there will be no regulatory arbitrage. Otherwise, it will not be good. Thank you.
Okay, so thank you and all the best.
Thank you. We have a next question from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good afternoon, sir. Firstly, many congratulations on successfully completing the transition to the new platform. So my first question is, we have seen some moderation in volume post the shift to the new platform. If you can share some details, whether this is on account of some lesser functionalities on the new platform compared to what we had on the older platform, and is there any path as to by when we will be able to give the complete functionalities to the market?
I don't attribute it to any functionality. Okay, those functionalities we have seen actually when we have taken a decision not to release those functionalities. We have taken how many members are trading, how many clients are trading in that. There's hardly any number. Okay, I mean in one of the contract it was 6 clients were trading. Okay, or 6 members were trading, and that too volume was about 20 crores, something of that kind. So it doesn't make any sense for us to launch that contract. Actually, such kind of things are coming in the way of a scale up of the technology. Okay, and I will explain maybe a little later as to what is the scale up that is happening. That is one part of it. Yes, as I said, the period from 1st October to 13th October, if you see, the volumes were options especially. They were pretty high. If I am not mistaken, it is 1.3 crores, 3 lakh crores, 1.3 lakh crores around the first part of it. So the 1st October to 13th October. And yes, after launch, there are some issues. Some members faced that they are more to do with some of the latency, or some of them may be related to what you call some data packets, order packets, not the trades, getting delayed response. Okay, these are the things that were experienced. As I said in my introductory remarks, they are all fixed behind us. I am sure we will see good volumes, provided there is volatility. That's important. Underlying factor is that.
Right, sir. And secondly, sir, I think next, what did you say about the monthly gold option contracts? Is that what something that you have taken up with the regulator already? And can we see that this will be launched over the next 2-3 months?
Yeah, that's it. That contract is already there, and renewal is what is applied, and we will get it as and when we get it. We will be able to introduce.
Okay. Also, sir, this 16th October, you would have capitalized the amount for the new platform, which is CDT, and I am assuming from third quarter, the depreciation and other related costs will come into the P&L. So could you share what is the total amount that has been capitalized and over what period would we be amortizing this?
No, I think when we announce the results for the third quarter, we will definitely give those details. But more important is this is amortized over a period of 5 to 8 years. That's what has been the policy, depending on the item.
All right. And finally, sir, on this SGF contribution, which was seen in the month of September and again in October, 14 crore, any basically numbers that you could share, that would this be a more of a recurring thing going forward? And should we build some 20-30 crore a quarterly kind of a run rate for this?
As you said, this is not something which is an expense, although it is accounting treatment is an expense. It's not going out of our hand or anything like that, and it is required for the growth of the business. Is what we are looking at it, and so we need to look at it positively, not as a negative. And whether is it going to be a recurring or not, I will not be able to comment. The reason being is, in the last 3 years we did not contribute because the open interest did not go higher. Now, as I am speaking, the open interest is almost all 40,000 crores. Maybe in the last several years, maybe 5 years, 6 years, 8 years, maybe it is the highest ever. So maybe prior to CTT, what was the number? I don't have it readily, but at this point in time, this is something. It is a high watermark is what we are clocking. I think the other day I saw even 43,000 crores also. So if the businesses grow, people retain their open interest. I mean, for trading next day, whatever it is, I think it's good for us. Good for us. More and more traders will be attracted. The open interest is one key criteria, key parameter. Otherwise, only day traders will be there. So, coming back to the question, will it be a recurring? Yes, if it keeps on increasing it, open interest, it will be recurring. But if it stays at this point in time at 40,000, 43,000 crores, whatever it is, then it will not be a recurring.
Understood. And sir, final two accounting question, and then I'll hold back in the queue. First is the interest income that we earn on this SGF balance. You said we have 740 crore of SGF balance. Does that flow through the P&L or it does not? And the expense that we incur in a quarter, this quarter we incur 10 crore, 11 crore. Do we get tax deduction on this?
Yes. Right. And just take it. Yeah. So the interest income that we earn on SGF is plowed back to SGF. It's plowed back to SGF. It's not routed through the P&L. And the contribution that they made to SGF would be an allowable deduction in our income tax return.
Perfect. Thank you so much, sir, and all the best.
Thank you.
Thank you. We have our next question from the line of Presh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Congratulations on the successful transition of the software. Firstly, on the just a data keeping question, what was the options revenue in the quarter?
Yeah. So during the quarter, we earned 82.8 crores on options.
And for the half year?
I don't have the half. Yeah, so it's 82 plus 64.
Okay, got that. And sir, just continuing on this SGF bit, You mentioned that you had hit a high of 43,000 crore of open interest. So what are the next threshold levels would you see before you would have to contribute incrementally to this SGF?
See, whatever is the high that we have got it, I said 43,000 is around. It's not I don't have the exact figure right now. So the high watermark will always remain, and it is below that, then we don't need to contribute. If it crosses and then new high watermark is kept, then we have to actually contribute.
Okay, all right. And sir, before this transition, there were certain aspects with the regulator, regarding, one was obviously the SGF, partial withdrawal of SGF. Second was, I think, if you have a net position on the equity side, you are allowed to give net margins, but on the commodity side, you have to have margins on both the positions. So you wanted that kind of approval as well. And thirdly, there was another thing wherein you were looking for interoperability of margins between BSE, NSE, and MCX. So any of these talks that would have started with the regulator, or how should we see this kind of evolving over the next 2 or 3 quarters?
I'm sorry, I think you need to repeat.
So before the transition happened, I think we were in discussion with the regulator for 2 or 3 aspects. First one being the partial withdrawal from SGF. Second one was the fact that the way we see it on the equity side, where you have to have margins based on your net positions rather than margins on both long and short positions. Here on commodity side, do we have to give margins on both the positions, is what I have been made to understand. So whether that can be sorted with the regulator?
Yeah. So see, one is that on the SGF withdrawal, I think there's a circular that has been issued. But how much is as far as our requirement at this point in concern, it is going up and up only. So that is why I said it's happy to have a problem, but the calculation of it is what we are approaching the subject matter to SEBI. That methodology has to be changed, is what we have been asking. That has not as yet been addressed. That's been under consideration. This is one part of it. The second part of it is interoperability of the margins. That is again has taken up very actively. I think there is a industry standards forum has been established, and I think many of the participants from the members also, and the members and associations the member associations are also actively involved in that. So the recommendations are going to SEBI for their consideration. That is what.
Okay. And sir, with regards to FPI's participation, what is the kind of traction we're seeing, and do you see this business to be a meaningful contributor, say 3 years down the line? And obviously one of the hindrances to this was the technology transfer, and now that's behind. What are the things? What are the enablers that would be needed from your end to kind of scale up this business?
Yeah, one is that FPIs look for, expecting a DMA to be given. I think we are already there on the DMA. We have to release it to the market. I think the system is getting stabilized. I don't want to disturb it at this point in time. But sometime this quarter or early next quarter, definitely we will release DMA facility to the FPIs. That is going to happen. So that is what they are looking forward to. That's one part of it. The second part of it is there are a lot of HFTs who have taken the membership on the exchange, and they are on sidelines because they don't want to incur IT development on the old platform and new platform. Now they are all now actively looking at it. I'm sure we should be able to get traction out there as well. And that's another area which we are looking forward to have as we go along. But in the medium term, I'm sorry?
Sorry, continue. Sorry, sir.
In the medium term, yes, we expect FPI to contribute substantially for this market.
I was asking any specific products that FPIs would be more attracted towards?
No, as of now, they are interested in cash for cash settled products only. And algos also, they will be playing, they will be interested in algos also. But then they will come through via some members only. That's what the DMA specialty is over. But then they will manage themselves. That's the way it is.
Okay. The last question on the just on the P&L side, you have a higher depreciation in this quarter. Any specific reason, and or how should we build this going ahead?
See, while we are implementing the CDP, a lot of assets which are maybe less than 1 lakh, etc., are required, like laptops, etc., desktops, and other things. So that's what we have provided for in this one quarter itself, so that it will not be. That's the policy. We've gone by the policy.
So this will not be a recurring run rate for CDP, right?
It will not be. But anyway, in the current quarter, having implemented the CDP, you will see a bunch out there.
Yeah. X of CDP, this should be the run rate. Over and above that, we will just get the CDP depreciation, right?
That's right.
Yeah. Okay. Thank you so much. All the best.
Thank you. We have our next question from the line of Sanket Godha from Avendus Spark. Please go ahead.
Thank you for the opportunity. Sir, my fundamental question is that if you intend to launch weekly expiry options, we need to have weekly futures, right? Because our options devolve into futures. So if you don't have weekly futures, we can't. Can we launch weekly options? That's my first question.
Yeah. Okay. When I say it's weekly options, it's not weekly. It is expiring it. It is maybe 4 monthly contracts having different expiry dates is what the whole concept is. Okay, because you can't have anywhere under the SCRA less than 11 days contract. Okay, so it will be a monthly contract expiring every week. One contract will be expiring. In any case, the underlying features will be there. It's not necessary once it expires, the feature has to necessarily expire in the next 2 days or 3 days. That's not the requirement.
Got it, sir. Got it. Perfect. And second thing, sir, now given we are making contribution to SGF, is there is a probability that now we will reduce the margin requirement in crude, so that futures volumes can pick up in crude? Because one of the reasons why we were reluctant to reduce the margins on crude is because the contribution goes to SGF. So any change in the thought process there, sir? And what is the current margin requirement for crude?
Current is 40%, around 41%, 40 is for crude, about 31% is for NG, okay, including the additional margin. But whatever contribution we have made is not to reduce the margins. In fact, the SGF under scenario analysis, the expected loss in the event of all positions, 50% of the market positions are closed out, the expected loss arising out of that is what is assessed, against which even the 40% and 30% margins are also adjusted. Still there is a shortfall. That is the shortfall we have contributed. Okay. So go ahead.
Sir, hypothetically assume tomorrow your open interest increases from current, say, what you alluded to at 40,000 odd crores to take, say, 60,000 odd crores. So which means that the 11-12 crores what we have provided will be provided in the next quarter too, right? Or if I want to put it in this way, if every quarter or on an average, every quarter you have 40,000 open interest, 40,000 crores open interest, then this 11 crore or 12 crore will be a recurring line item, or if it goes beyond 40 only, then it will come and hit P&L.
As I said, the high watermark is what is taken into consideration. The high watermark was around 42, 43 or 44. I don't exactly have the figure. If it goes beyond that, okay, and beyond that is not just one day. It is average for the entire month, okay, and for the average entire month is more than that much, then the requirement will go. Okay, but so in one, I'll say for 5 days it shoots up, then it goes down, then we will not. It may not, average may not influence. And also, we also impose additional margins whenever such kind of activity is taking place. So that will also come as a buffer to this SGF requirements at that point in time. And so it is, in spite of those margins, if the members are trading, the clients want to retain their positions, open interest, it is only then and then, if the average goes beyond high water mark, then we are required to contribute.
But sir, this open interest is predominantly increased because of the options only, right, sir? Rather than futures, it's increased because of options. So if options volume continue to sustain the current trend and accordingly the open interest goes up, then this should be assumed to be a continuous phenomenon. That's a fair understanding, sir?
Well, options is contributing about 21,000 crores open interest, and then futures is contributing about 22,000 crores. So to the open interest. Now within that, again, for futures maybe gold and others, and then options it is the crude, NG. So it all depends on that.
Got it, sir. And last one from my side, the data keeping question. Sir, if you can break down your operating revenue into income from float, connectivity charges, and so forth, just to understand how much was transaction income and other income in the other operating. Yeah. Sure.
Yeah, so the transaction charges was 133 crores. Out of 139 crores, 133 crores came from transaction charges. And then the balance is membership fees, terminal charges, connectivity charges, and all the authorized membership fees and all.
How much was float income, sir?
From?
Float income, interesting.
Float income in a consolidated, that's around 27 crores.
I mean to say this, the float from the margin money, not the entire year of.
Yeah. So, sorry, that's not 27 crores, 23 crores. 23 crores.
So this is only from the margin money, right, sir? Not from the entire cash on books.
The margin.
Okay. Perfect, sir. Thank you very much.
Thank you.
Thank you. We have our next question from the line of Lavanya T from UBS. Please go ahead.
Hello. Thanks for the opportunity and congratulations, sir. So just wanted to check on AMC cost that we'll need to be paying to TCS from the current quarter. So the current quarter we'll be having both the cost of TCS as well as cost which we need to pay to 63 months, which is 125 crores. Both will be hitting in the current quarter, right?
Well, as far as TCS is concerned, for 1 year it is under warranty. So till next October, there's no next September, I would say, there's no payment.
Okay. And on the admin cost, this quarter we had higher cost of around 32 crores. So will this be the run rate going ahead, or is it one-off in this quarter given that we were transitioning?
1 minute, CFS. Mm-hmm. Admin, you are saying 32 crores?
Yeah, it is both other expenses other than staff and software, all combined was coming to 32 crores.
Not 32 crores, ma'am. I mean, it is 45 crores if you say computer technology expenses and employee cost 27 crores. And then we have legal expenses and CSR and other expenses. So it adds up to 45 crores, and then you have another 6 crores for depreciation, which adds up to This 200 crores, and then the other is all linked to our turnover. What we have paid to 63 moons, as what we have paid to CME, regulatory fees, and contribution to STS.
Okay. So the current run rate will be similar next quarter also, or there is any one-off is what my question was.
Next quarter we'll have a slight bump.
Next quarter means, let's to clarify, the current
running quarter. Yeah, current running quarter.
So there would be certain AMC costs that would come in for our new system that has gone live, for the operating, for the licenses and all, that would kick in, as well as the depreciation would kick in.
Okay, there is an AMC which will kick in the current quarter then.
No, non-TCS.
AMC relates to, let us say, IBM DB2 is our database, DB2 licenses, or some Microsoft licenses. These are the ones.
Okay. So how much will be that amount? Any broad range of that?
I think only next quarter only we will be able to give you that payment, and rather when we give the results. I don't think we'll
December end.
December end.
Okay, got it. And on the new products which you mentioned, that which we are going for renewal, one is steel TMT and gold monthly options. Do we have anything else which are there already we have approved and looking for validation?
See, I think it's not a renewal as such the word. Maybe some are under renewal, but then some are actually say go ahead. Yes, now that you have stabilized, and then you can go ahead is what we are looking at. And these are the two ones that we have looked at it. And maybe the cotton contract is another one which are waiting for some changes that the product advisory committee has suggested. And that is one thing we are going to ask for it. And some mini contracts also we have requested them to for consideration. And of course, electricity is another one which is we have been waiting for. But we will now the focus will be only on business. For so many months we have what to call. We couldn't focus on it, but now business. That's all. Maybe new products, new type of participants, and new areas, active engagement with the financial institutions and etc.
Got it. So maybe on this steel TMT, any reference to the global markets, like how big is the steel market? Like crude and natural gas is very big in global markets as well. So steel, any reference that we can see from other global markets, or how do you see the addressable market in India? Any sense?
There are various types of contracts are there. There are about iron ore contract is also there in some China and other markets, and steel bars are there, steel ingots are there. So I think it's fragmented in terms of various products are concerned, and value chain is concerned. Probably, I mean, I don't have readily that information. But steel TMT is something which we are actively pursuing it, because there's a lot of construction industry and infrastructure industry is booming. That is something which we are looking forward to.
Got it. If I can squeeze in one last question. So on the competition, so do you see if the competition reduces the prices of options or like the transaction fees, would they see more traction or like anything on the transaction fee or pricing that they can play around?
Well, see, the transaction fee assets that we have is also very marginal, and I don't think that will impact, because liquidity is something which cannot be taken away from one exchange to the another exchange by playing with these numbers. And we have seen in the past also, not that they have waived also many of the transactions in the past, yet nothing happened. That's the way it is.
Okay. So is the understanding right that even if they reduce option pricing, the liquidity in futures is what is more important?
No, I'm not saying that. The liquidity in options cannot be taken away by reducing the charges on the premium. That's all I'm saying.
Got it. Thank you so much. All the best.
Thank you.
Thank you. We have our next question from the line of Chintan Sheth from Girik Capital. Please go ahead.
Thank you for the opportunity and congrats for the successful transition. Kudos to the management at least. A couple of questions. One on the SGF accounting. You mentioned about the how it came for the calculation this quarter into the P&L. Is that an accounting change wherein we earlier used to route it directly to the balance sheet and this time around it was through P&L, or this is just this has been the case earlier as well? If you can clarify.
The last transaction, last transfer that we made or last contribution that we made to SGF was sometime in March 20, and it was routed through the P&L.
Routed through P&L. Okay, great. Okay, thank you. And second, on the capex front, if you can spell out now once the thing has been over, what will be the total capex we have spent for the TCS this new CDB migration, and total capex will be incurring for this full year, if you can spell out that.
As MD mentioned, that we'll take this, this will be disclosed when we close our December results, and we'll declare it that time.
So I'm not asking about the OPEX part on the capex part, because in the earlier call also, in the Q1 call also, we have been requesting it. But now that the transition has been over, at least shareholder must,
I think earlier also one more analyst has asked for the same thing. I think we would not like to disclose it at this point in time. It is there in the balance sheet or reserve, whatever is
correct.
What to call.
There won't be any additional. If I can ask from the CWIP, if there is any increase in the second half, or
material addition.
No, there was material addition. That's right.
Okay. And lastly, in terms of the premium to turnover in the options side, that we have seen decline over the course of time. How do we see this premium turnover to option turnover ratio? If you can explain what impacts this ratio over time, because the ADTO keeps on rising, but not the premium ADTO to the equivalent extent of the overall national ADTO. So if you can help us understand how should one look at it. Obviously there is an impact of the low volatility, but anything else you can spell out, explain that.
See, we have two slabs for options premium. Up to 55 crores of rupees, there is a 50 rupees per 1 lakh is paid by the participants. And thereafter, the incremental premium on a turnover above 5 crores, much like an income tax slab, 40 rupees is paid. Okay. If you are coming closer to the 40 rupees means the options volumes are increasing, so the average is being coming down. But it will not go below 40 rupees because that is anyway the minimum charge. That's what it is. We have only two slabs.
Right. Okay, great. That's all from my end. Thank you.
Thank you. We have our next question from the line of Rajesh Kothari from AlfAccurate Advisors. Please go ahead.
Good evening, sir. My first question is with reference to increasing the participation, whether it is from the distributors, the brokers. Can you just tell us what efforts we are taking to expand the distribution and participation?
See, on the member side, okay, it is coming down because of the members are consolidating their memberships under the unified regime of membership regime of SEBI. So to reduce their compliance costs, etc. So that is not the way that I look at this business. The number of UCCs that are trading are increasing. Whether they traded through A, B, or C, it doesn't matter for us. Or if C is not there, they trade it only through A and B is also fine with us. So keeping that in view, we are focusing mostly on the number of UCCs. While the business development team has the KRAs to increase the number of members, but as far as we are concerned, our focus is mostly on on quarter, how many more UCCs have come in, and at the end of the year, how many more UCCs have traded on the exchange. That is one part of it, one important. Second, the people who trade on the exchange, they are concerned about the cost. What is the cost of trading? Of course, CTT, STT we can't do. CTT or stamp duty we can't do anything. That's given to everybody. So the next thing is only to mitigate in terms of margins. The margins means committing more capital in some of these. So that is where this SGF contribution should come. We have not contributed as yet, except to the requirement that is needed. But if certain dispensations that we have asked will come, then automatically the participation will increase. That's another area that we are looking at it. In terms of fund houses who are participating, and then how do we increase that? There are certain asks from the fund houses, not from us, but regulatory regime. We ourselves have actually taken up with the industry as well as with the regulators what is their ask and whether that ask can be met or not. I think very actively is being considered by the regulator these enablements, and I'm sure once those enablements come, more and more fund houses also will participate in it. Then another front we are trying very actively is the GST conundrum, because we have various warehouses across the country, they are required to be registering it, because one doesn't know where one gets what you call delivery. So that is one major stumbling block for participation in other contracts other than cash contracts. That's why if you see the vibrancy in cash contracts is more because of the only limited channels being available for such kind of participants. If the GST issue is also addressed, again, as I said, we are actively taking up at various forums and doing the needful. So once those things are done, probably we will be able to address and attract more participation. Thank you.
Sir, you mentioned that number of UCC what you track. Is it possible for you to share some data that how many UCCs today currently we have?
Hello. Yeah, UCCs I will definitely give you. Okay. Praveen, you can explain. You explain what is there. You explain. Okay, you have to speak here. Okay. 1 minute. Yeah, it is there.
Sir, we are unable to hear you.
Yeah, I'm not speaking, so that's right. Okay. In the financial year to date last year, that is 22-23, we had 374,000 UCCs participated. Okay, that is from 1st April 22 to September 22, and the corresponding period now in the current year, 584,400 and odd are participated. So that's a big jump. Hello?
Sir, sorry, his line got disconnected. I'll take the next question from the line of Kamlesh Kasi from Pinpoint Asset Management. Please go ahead.
Good evening, sir. Congrats on the platform transfer. Just a quick question from me.
over the past few months, have you seen any defaults on counterparties? Thank you.
Absolutely not. Maybe not just few years. Maybe for several years we have not seen any counterparty defaults on the exchange. Thank you.
Got it. Thanks so much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand over the call to Mr. P.S. Reddy for closing comments. Over to you, sir.
Again, as I expressed my gratitude to all of you as well-wishers or otherwise shareholders on the exchange platform on MCX, and continue to support us. We will continue to work towards betterment of these financial results as well as the business that we are in, and we work towards fulfilling the promises that we make. Thanks to all of you once again. Thank you so much.
Thank you, sir. On behalf of Multi Commodity Exchange of India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.